All right, good morning, everybody. Hope you're having yourselves a fantastic start to the AM here. Happy Tuesday. Welcome back after a long weekend. I'll get this out of the way here now, but I will not be taking any questions about the disastrous Monday night performance. That was a horrific showing, and hopefully today's market is a lot gentler and nicer than that last drive. But today should be a great trading day. A few things for us to talk about here, right, before we kick things off. So first things first, we've got FOMC tomorrow, right? That's obviously the big news event here this week, and the market's going to be pricing either 25 basis points, 50 basis points, and even Congress has been asking for a 75 basis points cut here. And I have no idea, right, on what Powell and the Fed is going to do. And so I'm not going to be trading for like a preemptive desire, right, to try to like front run that rate decision. Generally, what we see here in the pre-FOMC day is like a positioning day, right, or a positioning trade. And because we're now post-roll, that definitely gives us a scenario where we could have a pretty volatile session here, right? And it'll be really exciting to see what kind of comes together. We're obviously seeing a pretty significant gap up this morning on ES, which is pushing us to new all-time highs, right, which is fantastic. And then NQ, right, also gapping up here, but still a little bit below its ATH level. The gap up, right, that we're seeing here between, say, this implied open, right, or this morning's open, I should say, sorry, versus yesterday's close is because of the futures, right? So there's a cost associated with the roll, and that's why you see that gap up here, right? So that gap up is not necessarily a huge concern or anything that we want to be too worried about, but definitely will create a little bit of extra volatility. Now, yesterday's volume shelf, not exactly incredible, but again, right, we are expecting that where half the volume was on the September contract, half the volume here was on the December. So we'll see how that comes together. Inside our trading accounts here this morning, it should be, right, when you're executing trades, you should be trading in ESZ, not ESU. So make sure that, right, when you are executing, it is in there, although that should be happening by default. And I would be surprised if that change isn't reflected already inside your trading accounts. And yeah, hopefully today is a strong session for us and we can really build things off to really, create a fantastic week for ourselves. A few things I want to focus on here just a little bit, right, is just understanding that we need to keep the main thing to be the main thing. So what that means here in today's context, right, is just not getting too far ahead of ourselves, right? So not getting too far ahead of ourselves thinking, okay, we know what the market's going to do, fine. Also meaning, right, that we're going to be focusing on controlling the variables we can control. I speak with too many traders that think about, okay, how can I build up 30 accounts or how can I get, max allocation and funding before they've ever gotten their payout, right? So they're, making mistakes, they're losing money in their trading, and then they're thinking that the way that they're going to optimize and make the most amount of money is by getting 5 accounts, 20 accounts, 30 accounts, whatever it might be. And so they're distracting themselves from what the main thing is, right? They're forward looking, right, instead of controlling the variables they can't control. And ultimately, that's going to cost you money in the long term. So get that first payout, right? Prove to yourself that you can actually do it. And then from there, paying with profits for more accounts is significantly easier than anything else. And then obviously for us, right, the main thing from a trading perspective is always going to be from the risk management perspective first. So if I can focus on losing small, I make it easy to win big. And last week was an incredible example of that, right? We controlled the variables we could control. We focused on keeping our position sizing where it needed to have been. And that allowed us to finish green in what was ultimately a very challenging week to trade. And so this week is going to be about doing more of the same, right? Not taking any trades that are outside of our system, not taking trades that are disproportionately risked, not optimizing for P&L, and just thinking about, okay, what am I needing to do, right? That's going to ultimately make me a more successful trader. And how can I take responsibility over those actions so that I optimize and create the success that I want. Someone asked me last week what I thought was the biggest change I made in my trading that ultimately made me profitable. And I think I was happy with my answer at the time. I thought it was a combination of a bunch of little small things. But when I had a little bit of time to reflect on that question here this weekend, the thing that came up to me here, or the thing that was really bouncing around in my head, was that by taking more responsibility over my future, my desired outcomes, the life that I wanted to live, that ultimately pushed me to start to be able to answer those questions internally myself. And so what I want to stress, right, it is the trader that takes on the most amount of responsibility, right, the most amount of accountability for their own decisions, that ultimately finds the most success in the market. So if you want to be a successful trader and you want to make the most amount of money, you want to optimize your P&L potential, then what you're doing is you are being accountable to yourself at a level that would make most people uncomfortable. That is going to be your P&L cheat code, right? It's not going to be taking more accounts. It's not going to be, doing whatever, right? It's not going to be averaging into trades. It's not going to be any of that kind of stuff. It's being accountable to yourself, understanding that you're the only one responsible for how successful you can be, and truly believing that and living that on a trade-to-trade basis is what's going to make you the best trader you can possibly be. And I think for myself, taking 100% accountability and responsibility for how successful I wanted to have been, or how successful I want to be even in the future, was what kind of pushed me over the top, right? It was that obsession over, okay, what did I do wrong here? What did I do well? What can I continue to focus on to keep making me better? That then compounded into making me better. So the theme of the week here, right, is going to be twofold. It's, okay, control the variables we can't control. That's what we always kind of focus on. But it's also the trader that takes the most amount of responsibility for their trading finds the most success inside their day-to-day process. So I would challenge you all to hold yourselves to a very high standard here this week. Push yourselves to a level that, is new, right? Like a new all-time high in responsibility. And I promise you that will compound into tremendous financial success. So with that being said, let's start mapping things out. Let's figure out what we want to do here this morning, and let's have ourselves a fantastic session. So good morning, Clark, Howell, Sarah, Suresh, Devin, Craig, Tasha, David, Ben, Salstein, Randall, Samuel, Tanja, John, Ruben, Jeff, Neil, Derek, Dustin, Jared. I'm going to ignore that comment, Jared. Chaz, Ben, Ashley, Mike, Nicholas, Kenneth, Rod, Nate, Adnan, Bergs, Jose, and Igor. Good morning, Ben. Hopefully you guys are all having yourselves a fantastic start to the AM, and let's crush today's market. So first things first, economic calendar here for Tuesday. Your retail sales fine. We got inventories and home builder confidence at 10. So we'll see how the market reacts to that. And again, just something to kind of keep an eye out, right? 1 minute before, 1 minute after, we will not be placing a trade going into those economic events. So we'll have a shot clock if we get something in this early, call it morning window. And then hopefully we get a clear path post 10 a.m. So what's the count here on ES? Let's start there. And let's fire away. Yeah, spot on, Jack. 2 out of 3 here to the upside without volume. And actually, we're going to call this an inside bar, right? Yesterday, fully confined inside price. And so we're looking for a continuation narrative. Now, we're at all-time highs here, right? So 57.30, give or take. So we'll go 57.40 as our first level. And then we'll go to like 5,800. So 57.50, 57.60, 57.70. Good morning, Juan. And then to the downside here, right, we're going to be targeting pre-market low, so 56.90. And then we can fill that gap, right, towards like 56.40. Cool. And then generally, like I think I already mentioned, the trade that you tend to see, right, on this Tuesday prior to FOMC ends up being like a little bit of a positioning trade, right? Well, send me a screenshot, Juan. I'd be surprised if it looks dramatically different. All right, what's the count here on NQ? I just need a glass of water. I'll be back in a second here, guys. Yeah, Jack, spot on, right? So it's a 1 out of 3 here to the downside, which is a similar narrative to what we have on ES, right? So weak trending price action here, and we're breaking out above that trend line. So we're looking for a good continuation narrative here towards like 20,000 and then beyond. So 19.9, 20K, and then we can kind of push towards maybe 21. 21K, right, which probably would be all-time high. So we'll go like 2100. Now, I don't know if we're going to get that much follow through here today. I'd be a little bit surprised. Especially because, you know, Apple's like struggling a little bit, right? So if our leading names are maybe not pushing as much as one would like to see, that could create a little bit of an opportunity for us. Your chart looks fine, Juan. Your chart looks fine, man. Just type in NQ1. All right, and then to the downside here, right, we're targeting a move towards 19.6. And then all the way down towards maybe like 19.3. Cool, and that's plenty of space here mapped out. All right, crude, higher high, higher low, decreasing volume, selling pressure here this morning. So again, right, 1 for 3 here to the upside, so weak trending PA. And we're targeting a move towards, we're at 70.50 right now, so 71, 71.50. And then we can maybe go up towards like 74.50. That seems to be the next point of contact. So we'll go 72, 72.50. Again, crude, I'm less enthusiastic to trade this thing. But it could set up, right? And then to the downside here, we've got 69.50. And then we've got it mapped out already nicely. Remember, Juan, Top Step X is integrating with TradingView. So it should look pretty much exactly the same if you just type in the same symbols and tickers as I have up here. All right, Apple gapping down here significantly. That's new. Maybe a little bit of a bear flag here on Apple, right? Post iPhone release. So here's your flag. And opening up. So red candle, increasing volume, right? Gap up. We're going to call this a week 3 out of, sorry, gap down, week 3 out of 3. So NA on a bull case, and we're looking for just a downside continuation under 214. All right, Tesla. Red candle, decreasing volume, gap up, right? So 1 out of 3 here to the downside. Similar narrative to what we have on NQ. But still very much stuck inside that Friday range. So, right, so that was the deal we had there all of last week. I don't see too much changing until we get up and over that range. So not much changing in this plan. Above 235 or under 210. Hey, good morning, Jen. Happy Tuesday to you as well. All right, Microsoft. Green candle, decreasing volume, gap up. Pretty big gap up here. So 2 out of 3 to the upside without volume. So we're either looking for a 440 breakout here, right? Or a gap fill reversal. So like, yeah, we'll call it BB reversal. Good morning, Herschel. And good morning to all of our DTR guests. So if you guys are here, checking us out here, say hello, introduce yourself. Feel free to ask questions. I'll do my best to try to answer them as I see them. But welcome. And yeah, hopefully we have ourselves a great day here inside the stream. Good morning, Greg. All right. Amazon, red candle, decreasing volume, gap up. Right, so 1 out of 3 here. And then we're looking for above 189 to the upside, right? Or a breakdown here under 183.50. Not much is changing. All right, AMD, green candle, increasing volume, gap up. Barely increasing though, right? So we're going to call this a weak 3 out of 3. And it's weak in twofold ways, right? Or in 2 ways. We have a weak candle shape, right? And we've got a weak volume profile, although it's increasing. So it's bullish, but it's not as like FU bullish, right? As maybe one would like. So we'll go look this for a 155 breakout here on volume. And then to the downside under 150. I'm going to go NA on the downside, right? 3 out of 3, so I should be bullish only. All right, NVIDIA, red candle, increasing volume. Red by the skin of its teeth, right? And then gap up. So again, this is a weak 2 out of 3 here to the downside with volume. Maybe starting to bull flag a little bit. Something like that. We'd like to see maybe a third point of contact there on those lows. But a breakout over 121 would be the play. And then a breakdown under 114 would be the narrative. Okay, Meta, big green candle, decreasing volume, gap up. So 2 out of 3 to the upside without volume. So we're looking for a point of contact here on the trend line is 540. So we're looking for a 540 breakout. All right, and then to the downside here, it'd be like rejection under 515. That's a ways to go. All right, Netflix. Red candle, higher high, higher low, decreasing volume, gap up. So again, 1 out of 3 here. We did not miss anything yesterday. 1 out of 3 to the downside. Looking for a breakout above this trend line. So a 704 pop would be the starting point here. And then to the downside, get under 688. So all we're doing here, right, is just looking at the internals of the stock market. So if we're primarily going to be trading ES and NQ, we want to make sure that the story is consistent across the board, especially if we are going to get a positioning day. Market is definitely going to be waiting for some news narrative tomorrow, right? Obviously FOMC. So we want to make sure that the story is consistent here. Otherwise, we're setting ourselves for a chop day. And a chop day is not going to be a ton of fun to trade. So let's make sure, right, that we're basically just not forcing anything here this morning before we do anything crazy. All right, Google inside bar. And we're going to be looking for a breakout over 160. And then to the downside, it's going to be basically like a 160 rejection, right? And it's going to be a 160 rejection because we've seen that get stuffed there before, right? So we've got one candle, two candles, potentially now a third candle here getting stuck under or at that level. So it wouldn't be surprising to see that happen here again today. So on an inside bar, definitely could be the scenario, but I'd prefer to see a bullish breakout. And then VIX hanging out 17 spot 11. So let's see how this thing kind of comes together here this morning. But yeah, it looks reasonable. Yeah, let's see how this thing kind of shapes up and how it goes from there. But definitely optimistic that, I mean, we've got enough volatility for us to get a bit of follow through here this morning. So let's just not fall in love with anything this AM. Yeah, Juan, the reason why you're seeing a gap up in TradingView and not a gap up in Top Step or in the Top Step X platform is because TradingView is the forward contract. So it's ES1, right? If I were to go EZ, or go ESZ, sorry, right? And I traded the the December contract, it's going to look exactly the same as yours, right? So it's just because you're at EZ1, it's showing you, or it's filling in that gap. ES1 leaves the gap there. That's the difference. Does that make sense? So you're on specifically on the December contract. ES1 is now the December contract, but it shows you where the roll happened, right? And what the spread difference was in the contracts. So what you care about is the price the same, right? Is it 52, whatever, right? 57, 23, 25, or whatever it is. The price will be the same. All right, any questions here, team? Yes, no, maybe. All right, fantastic. So I'm going to go make myself a quick cup of coffee, spend a few minutes here sort of visualizing a successful trading day, and then we'll jump on and hopefully crush today's markets. I'll be back in a few minutes, guys. If you have any questions, anything you want me to look at, please pop it in the chat. We'll do my best to answer it when I return. But let's have ourselves a big, big day. All right, so markets, right, generally the day before FOMC give us a positioning trade, right? So either a big move higher, big move lower, just depending on, which way things kind of go. So basically, we're trying to look to see if we can take advantage of that momentum here this morning. We've got a relatively big gap up. ES is at all-time highs. So if you're at all-time highs, right, very few reasons to actually sell. So maybe a slightly more bullish bias than bearish bias here this AM. So let's put it together, right, and see what kind of momentum we can get. Yeah, so I mostly trade ES and NQ here. With futures, with these prop firms, that's the best bang for your buck. But if there's something else that you're looking at, please feel free to drop in the chat. I'd be happy to give you my opinion on it. Good morning, Karat. All right, so let's see where that volume gets established here early, team. And then from there, right, we can look to take advantage of whatever momentum does show up here. Yeah, that positioning trade this morning should be relatively aggressive. So we'll be able to judge that pretty early on here. It'll be a combination of things here, Ashley. So generally what my strategy is a variation of this. So to the upside, I have kind of three setup triggers, either a high vol breakout, a low vol fake out, or a pullback scenario. And then basically the opposite of that here to the downside. I've got two different entry techniques. So one will be either we get our setup trigger occurring and then we get like an immediate breakout, where I'll look to buy in on a slight pullback. And then the other technique, right, is a pullback inside my confirmation candle. I'll explain that all as we're getting closer, or, if we do get an opportunity here for an entry today. But yeah, the way I look at it is when we're looking for an entry, we want to see price move aggressively in our direction first. So I call that elevator up. And then I want to see the stairs come down. So when price goes aggressively, we should see a quick little retracement, big pop, quick little retracement. And then on that little retracement, on that weak pullback, that ultimately ends up being our setup trigger or entry trigger. But like I said, I'll do my best to try to break that down here as easily as I can. And then we can kind of go from there. Okay, there we go. Oh, interesting. So we're going to focus on NQ1, right, giving me a slightly different price than what I'm seeing. So I'm just going to go NQZ. All right, I'll do the same thing for ES, ESZ. That might just be remnants here today. Now I do see the same price, but you can see here, right, 57.23.25 versus here 56.62.50. So we'll just be on the December contract here today. Again, nothing is going to be changing from like a technical perspective, but for whatever reason, TradingView is not reflecting that here yet. It is on the daily time frame, but not the shorter ones for whatever reason. So decent sized open, right? More volume than what we saw there yesterday. And then NQ, right? We've got more volume than what we saw yesterday as well. So we do have setups in play here. So let's see how this shapes up. Appreciate that commentary, Randall. I think you're spot on. So possibly a little bit of a fake out there on ES. So there's a couple ways that you can do that. Inside your Tradevate account, you can make sure that you're trading the forward contract. The other alternative, right, is for on your trade window to be specifically on NQZ instead of ES1 or NQ1. So yeah, the code, right, for the September contract is U. ESZ will be December. ESU will be September. So the workaround, right, is, yeah, make sure that you're auto rolling, right, inside your Tradevate account. And then from there, right, make sure you're on the December contract. Make sense? Interesting little sell-off there. So this is not a good setup trigger here for a downside breakdown because it's not on increasing volume. So we're not interested in that here to the downside yet. And again, the theme we've seen here last, say, 10 days or so, right, is that the market wants us to wait for that 10 a.m. data before we get a very clean narrative. So if that's the case, that's fine. I'll be happy to sit and wait until that happens. And I certainly don't need to force anything, right, until it does. One sec, guys. Got to put a bit more ice in my coffee. Back in a minute here. So what we're watching for here now, right, is a possible fake out setup here on ES and NQ. Right, that maybe is our most likely scenario here for a tradable opportunity. We'll see if that's the case. I'm not quite ready to call it here yet. Again, not great volume on that little pullback. So again, just be a little bit patient here. Yeah, it should be reflecting better tomorrow, right, for when we are there. ES1 is already the December contract. It's just for whatever reason not showing in trading view. So it's just for a small technical reason that we're trading or on the specific on the December contract. I cannot get my brain to say what I'm trying to. So apologies. So it just looks a little short-term pain point. Shouldn't be anything significant. So still not quite ready for any fake out scenarios, right? Would like to see a high volume separation away from this range. But like I said, that probably is the most likely setup that we have here short term. Just might take a little bit of time for us to actually build up into that idea. So we're still being pretty patient here. No reason to really jump into anything. And again, what's one theme that we saw there a lot last week that maybe NQ is dealing with here a little bit right now? What did we get stuck under a lot last week? Yeah, psychological levels and round numbers, right? So we're struggling to get back up above, say, 17.8. So we'd like to see it probably, if we're going to be playing a reversal scenario, right, for it to hold above that psychological level if we're going to be targeting that upper red line. Nice one. Well, good luck, man. Take it slow. Don't rush into anything, right? Don't feel like you got to do it all in one day. One or two good trades is all you need, right? So, yeah, Jason, to trade the December contract, you just type in NQZ instead of ES1 or NQ1. So you type in, even if you go type in NQ here, right? And then you expand that window, you just click the December contract. So you just type it in, right? And I would say pretty subdued volatility here so far this morning. Right? We haven't seen a ton of volatility or a ton of movement yet inside our tickers. So we've got reasons to be patient, right? For sure have reasons to be patient. We want to see it get back up above 19.8 for NQ, right? And ES, we're going to look for just a breakout, traditional breakout scenario. So we have a chance. I keep going to the wrong one. Apologies. So the cost of the roll, right, is about 50 points. So that's why we're seeing a slight difference here. So again, touches 19.8 and fails. So we still want to see that scenario play out, right? We've got more and more evidence that we want to hold that 19.8 barrier before we can be aggressive. So our short-term analysis is pretty much spot on, even if we aren't getting the look that we want here yet. Apple bouncing pretty well. So let's see if it's got the juice. And we got 14 minutes, right, till the data drops. So at this point, market might just be waiting for that home builders confidence, right, and inventories. Again, if that's the case, no worries. Happy to sit and wait until that happens. Remember, guys, as traders, we get paid for our decisions, not our time. So it's really all about making as many high-quality decisions that we can make on a day-to-day basis. And all we need is one or two really good ones to have a fantastic week. Yeah, so this is Market Watch. And then you could also use like Forex Factory has a good one. So you also have this that's available if you want. Again, there's not really a huge difference between the two. Again, touches 18.8, sorry, 19.8, and then can't hold above. Yeah, you can absolutely use the Trading View calculator. Good shout, Randall. Reason I don't is just gets a bit messy. So I just don't like having as much stuff on my screens. So again, touches 18.8, 19.8. I cannot say that in the right combo this morning. And then dies a little bit, right? So we're still waiting for that to occur. It's going to be challenging for me to get a breakdown scenario that I trust. Okay, well, there we might be getting one. Yeah, well, all that means, Jack, right, if it's a 1 out of 3, just means that we've got flexibility in both directions because we've got weak trending price action, right? So it doesn't mean that we have to be fully bullish or fully bearish. It just means that we have a weak trend and we want to see a strong trending reaction before we jump into anything. So maybe starting to get a bit of that scenario here now. Right, so this would be setting up here for our downside opportunity, right? It's going to be second biggest volume of the day. So I'd like to see it close under the previous low a day, and then we could set up something that's like along these lines. Now, it's not going to look like it's a good enough close here, right? Not a good enough close on the 3-min. On the 5-min, maybe a little bit better. We could look for that aggressive entry technique. So stop loss, it's going to be pulling back here a little bit, see where it stuffs. And then we want to see it move, right, point to point down and then pull back tick to tick. So stop loss here, 19,762.75 would be our starting point. What the heck? Okay, and now we want to see it flush under, right, the 744. And then we can start to look to buy a position. And this trade will have a shot clock, right? I've got 8 minutes to hold this thing. So I could realistically buy 2 contracts here. Okay. So now we want to see it pull back point to point. Still hasn't done so. Guys, your order window should say NQZ or ESZ, right? Not NQU. Getting too many messages about this here this morning. Your order window should say NQZ, right? On the December contract, not the September contract. Please don't trade the September. Okay, so now we're watching for a pullback right into 37 here. Okay, no entry. Just missed it. That's annoying. Now, it's good volume on this candle, so we could reset up. Still going to watch. We got 8 points to go. So we care that it's moving faster lower than it's moving higher, right? Guys, to switch to your correct contract that you want, you literally just change it in your order window. Please, come on, guys. Take care of these variables. Especially right when it's entry time. Come on. So, looking for a weak pullback here. Still around that 37. Still waiting, right? It's going point to point higher, not tick to tick. So waiting it out, waiting it out. Okay, better. Well, we already talked about the criteria here, Randall, right? The rule is we'll close it within a minute of that time frame. I have more than enough time to still get follow through. Okay, so still waiting for a little pullback here. All right, guys, I am in short. Average price 19,737.25. And I have a shot clock on this trade. And this is one contract. All right, looks like I got stopped out. Interesting. Guys, my job here as a trader, right, and I want to stress this because I feel like I say this all the time, but is to trade my system in front of me and to not give myself excuses to not trade my system, right? So it's too easy to talk ourselves out of trades if we're fearful. It's too easy to talk ourselves into trade if we're greedy. So all we can do is trust our system, trade our technique, and build rules around that. right? So if I make an exception on every single trade, all I end up doing is just confusing myself over what I should be doing when and where. And all that ends up doing is costing me money because it causes me to be late, to be early, to be whatever. So my rule of thumb there, right? If I have a minute, if I can close it within a minute of market data, I will take that trade. If I have 30 seconds to go, then I won't, right? But if I have a signal here and I get a good signal and it's an A+ look like it looked like it was, then I'm going to take that trade 10 times out of 10 because that's what my system dictates, right? The more and more I deviate away from trading my technique and trading my process, the more my results become random, right? Well, I switched to one contract because I didn't want to lose $1,000 on that trade, right? My max loss that I'm willing to accept is to trade, think about a $500 loss. So I don't want to take a $1,000 loss when my max loss number is $500, right? So I'm doing my risk calculation and seeing that, okay, at that sizing, I can't get the position sizing I want, so I need to size down. All right, so now we have a 10-min reversal signal. So we map this out again, right? Ideally, we probably get the probably don't want to see the pullback scenario here. So everything is always built out from a risk management perspective first, because I can bounce back from a $500 loss, no problem. Bouncing back from 1,000 starts to become more and more challenging. Okay, so now we're starting to look for a move here to the upside. So we still do not have the mandate to go the aggressive entry technique. So this would still be a pullback scenario. But I don't want to be risking 50 points, right? 50 points with one contract is still a $1,000 loss. So I don't want that. That's too much. So now we're looking for that aggressive breakout. So we can have our stop loss to be 19,738. And we're looking for elevator up, stairs down. And this will be a 1-unit play. So everything is always risk management first, guys. Everything is always risk management first. So watching here, right? That's a good little pullback. Let's see if this thing can give me an entry here. All right, so looking for an entry. All right, and I am in average price 19,772. And so far, so good. So we'd like to see a little bit further separation here. Great entry, Mike. Great entry. And then we can look to build up our position, right? And increase our sizing. But so far, so good. So So that's $400, right? Give or take. So already almost made back that entire loss. Just trade the system in front of you. We size down so that we don't have to overthink it, right? We all have a capacity to overthink. And when we overthink, we tend to miss trades that are winners. We tend to overvalue, right, our ability to see things in the moment clearly. So we want to avoid that, right? So how do we do that? Well, we trade our system without discrimination. So far, so good here. Oh, whoops, just spilled some coffee. If you're looking to make an exception for every trading opportunity, the only thing that won't be an exception is your P&L, right? You're just going to talk yourself out of trades. You're going to talk yourself out of winning opportunities. And you're going to feel gun shy. So will I take losses? Absolutely. The reason I size my positions the way that I do is so that I can very easily recover from those losses, right? That is literally the point. So now I'm up $475, right? I'm 1 point away from being green on the day. So all I'm doing, right, is indiscriminately trading my system. I'm not allowing myself to apply exceptions, to apply random rules or anything along those lines. I trade my plan as it shows up. I trade as many A+ setups as I can because that is what I've backtested, right? I've backtested those results, not every single random little exception. And if this doesn't give me the move that I want, okay, I'll take my little $300 win and try again, right, for that next opportunity or setup that comes together. And I'll find a way, right, to keep trading my system. Remember, guys, when we backtest our ideas, when we backtest our strategy, we're backtesting without really looking at every, 10 a.m. data, every yada, 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 right? We're looking at price action purely. So when I'm trading my system, I want to be looking at price action purely. It's the only way I'm going to win, right? Because that's what I have tested. That is what I have basically seen to have worked. So for me to abandon that because of a feeling would be a way of me deviating away from my trading system. And that makes me a gambler, not a trader, right? And I'm unwilling to trade things that are counter system. So it is an incredible amount of stubbornness to follow my process. That's really all it is, right? And if you can't be stubborn enough to trade your process, then you're not going to ever survive the pros of it, right? You're just going to talk yourself out of ideas and only experience the cons of your technique. So we don't want that. And boom, all right, now green on the day, right? Plus 620. If this thing holds above 800, like it looks like it should, then we're going to put ourselves in a situation where we can look to add to a winner, right? And keep building up our position sizing here to take advantage for a move towards high of day. Yeah, so here we're waiting for a close above 19.8. That's where we've seen price action struggle here so far. And if it can't hold above that, then that's probably not a great sign, and I'll take that win and move on. And I'm not changing time frames here, right? My signal was on the 10 min. My entry was on the 10 min. So I am watching how price action reacts on the 10 min time frame. I'm not switching to the 3. I'm not switching to the 5. I'm not looking for confirmation biases on other time frames. I entered in on this time frame, so I'm doing all my analysis here. Understood? All right, good. Right? It is the consistency in our process that creates consistency in our outcome. The more inconsistent we make our process, the harder it is for us to actually get the back-tested results that we've created. So here, right, didn't get the hold that I wanted, so I'm going to look to close this position. And I am out. And that means I am green on the day, right? So now, right, we can look for a different time frame to see if it gives me another opportunity, right? Maybe we can play a breakout above the opening range. Maybe we could do something along those lines. The price action didn't behave exactly how I expected. So I'm not going to overrate my ability to get lucky. Okay, so I'm up about $120 on the day. And we'll see if we get another look. So ES might be giving us the opportunity here on the 3. Little fake out lower, high vol breakout. Stop loss have to be 723.75. 57.23.75. I think I might have said that weird. A little inside bar here, so this still sets us up for the aggressive entry technique. And I have not missed anything on NQ, right? I've not. So I'm not going to overrate, right, my ability to get lucky. Trade my system. If it doesn't give me exactly what I want, I cut, move on, reset, and look for another opportunity. Good example here so far today, right? So now we're going to look for the aggressive entry technique, right, on ES. So stop loss 57.29. And let's see how this thing holds. Again, we're looking for elevator up, stairs down. Okay, not the reaction we wanted, right? Not the reaction we wanted on NQ. Saved ourselves a ton of money and a ton of stress. Good. So we reset. Now we look for a different time frame. And we trade again, right? We wait for another opportunity. Right? So instead of getting a pullback here now into our entry price, right? We closed at, okay, I closed at 98. So maybe it wasn't a perfect close. Maybe left 10 points on the table or something along those lines. But I saved myself the mental capital of having to deal with this bullshit, right? No aggressive possible technique there on ES. We watch maybe the 15 min could give us an opportunity. Maybe the 5. The 3 would need to close green. So 1 for 2 on the day here, up about $120. Not a monster session by any means. But just following my rules, trusting my process, and ignoring all the other little distractions that are designed to try to cost you money, right? So again, the 15 min time frame couldn't close above that 800 barrier. ES on the 15 might be the most appealing. Again, would need to see the aggressive entry technique ideally, right? A stop loss at low of day starts to become very challenging for us to get a pullback in towards. So guys, I keep trying to stress this a little bit here today, right? It's very much on my mind. But the only way that we can be systematic traders is if we follow our system without exceptions, right? Every time we apply an exception, we're just feeding into that feeling-based trading, right? So would it have been nice to not start with a losing trade and be up, okay, take that $600 win? Yeah, of course, right? But I trade my system. I build everything out from a risk management perspective first. And I make money over the course of hundreds of trades, not a singular outcome. So I can't obsess over one trade too much, which is why I need to ignore the feelings I have associated with that singular event. Right? So we back-tested this idea on hundreds of trades. So we know that over a large sample size, it works. The only way for me to get a large sample size is to trade every version of the setup that shows up and to build out everything then from a risk management perspective first. If I don't like the risk, that's the reason to avoid the trade or to wait for a different entry. Everything else is just noise. So if you want to quiet the noise in your head for when you're trading your idea, stop applying exceptions and looking for reasons to not trust your system. System works. We've got more than enough evidence to suggest that, right? Not only do we have back-tested evidence, but we have stress-tested evidence over the last 6 months. So when we talk ourselves out of scenarios or out of trades, we're not doing ourselves any favors, right? Does that make sense? This is a very important concept to know. Right? We cannot survive the variance of our trading account if we're trying to solve for perfection. We are playing a game of probabilities. So we have to embrace that and not pretend as if this time is going to be different. Right? Because if you have a predisposition to overthinking, you're always going to find an excuse to not take something. If you have a predisposition to being too aggressive, you're always going to find a reason to jump in early. So the only way to counter both of those negative behaviors is to trade your system without discrimination. Only way, right? The only way. If we want to be robotic, that's how you be robotic, right? And it doesn't mean every day is going to be beautiful. It doesn't mean you're going to be correct on every single one of our trades. That doesn't exist. So we have to stop trying to solve for 100% and play the numbers game. That is the only way to win in trading. The only way. A+ setups will fail. A+ setups will win. But more A+ setups will win than fail. And we can't try to decide, okay, this one's going to fail versus that one's going to fail when they both give us the same quality of signal. So we trust our technique. If our technique starts to prove to us that it isn't working, we adjust, we take a step back, we re-back test an idea, and then we go back to that relentless trading of our technique, right? Not every day is going to give us monster wins. Not every day is going to give us monster losses. But if we follow and take every single one of the trades that we see that shows up that is A+, then we win at the end of the year, right? We win at the end of the week. We win at the end of the month. But we cannot get addicted to that short-term dopamine of trying to optimize for perfection on each decision. We trust our signal. That's it. Everything else is just noise. And again, we read the market very well here on NQ, and it potentially is now giving us a setup here to the downside. What is missing on NQ? So if we're going to call this an A+ look, what is missing? Volume. Spot on, right? So without that volume, we know that this is a trade that we can walk away from because it's not giving us that outlier volume standard. So then we can switch to a different time frame, right? And reset and look for another opportunity. So again, all we're doing, right, is we've defined our rules for our system and we are just executing them without discrimination. We make it binary, right? Yeah, always, yeah. The 3-min, at the time it was under the opening range. But yeah, it did close under. So we're switching to a different time frame. We want to see this candle close under the lower range of this green box on increasing outlier volume. If it doesn't give me that, then I reset and I look for another setup opportunity. That's really well done, Jeremy, right? Fantastic job following your rules. Incredible work with your risk management. And yeah, okay, 95 bucks, not the best day in the world, right, by any means. But you trusted your system. You're building up those habits. You're improving your process. That's going to compound into fantastic decisions and a fantastic outcome for you because you're playing the game of probability. So I love to see that, man. Hopefully a bigger day tomorrow. But you can't complain about that. Any green day is a good day. So congratulations, man. Proud of you. And I want to stress this, right? The reason why I'm so stubborn about following my basic back-tested results is because I'm trying to create a process where my muscle memory is what guides my beliefs, right? So instead of relying on the market to feel like it's the right thing, instead of relying on whatever, I'm relying on my muscle memory to basically judge my actions. So instead of having a muscle memory that's impulsive, by being incredibly stubborn in how I'm basically trading, then when I have a trade where I go on tilt or I have a day that doesn't go my way, my default reaction is to then to go back and to just trade my rules, right? So if you get really good at following your impulses and you get really good at basically trading your feeling, oh, I think this time is going to be different. Oh, I think I should do X, Y, Z. I should do this. I should do that. Well, then when you have a day that doesn't go the way that you want, your first reaction is to go back and reward, right, that dopamine of this time is different. And that's when, as a trader, you get into really expensive scenarios. So the way that you counter that, right, is you become the most stubborn prick in the world, which is what I can be here sometimes, right? But you get stubborn at basically doing what you say you planned on doing. And the more and more that you practice basically just repeating those boring behaviors on a day-to-day basis, then you default towards making those decisions, right? You default towards following your rules. You default into following your process. So at that point, right, you become like robotic in your execution, right? You become robotic in your improvement. And then when something is wrong and something is broken in your trades, because you do the same thing every single time, it's obvious what you need to fix to become more profitable or to optimize your P&L. But the more variance we have in our decision-making process and the more variance we have in our day-to-day behaviors, all we do is just cloud our patterns of behavior, and we don't know what we're doing that's making us money or what we're doing that's costing us money. So there's an incredible amount of stubbornness in following my system on a day-to-day basis. And then if I get evidence that that system isn't working, because I do the same thing every single time, I can look back and say, okay, oh, it's my entries that are shit. It's okay, I'm buying too close to market data. It's I'm doing whatever. And then I can optimize for that decision, improve it or remove that process, and then scale up my P&L even further, right? So if you want a consistent outcome, you have to have a consistent set of behaviors. Otherwise, your pattern, right, of what's costing you money is going to be very, very random. Does that make sense? So would I have realistically survived this pullback here? I don't think so, right? So again, I made a good decision. So again, what are we waiting for now here, right? We're waiting for a breakout above the upper end of the opening range. And then we can have some joy. On ES, we maybe still have a little bit of a scenario here for that aggressive entry. Right? Here's your high vol breakout. We've done nothing to invalidate that signal yet. Right? We see only dip buyers below, right, defending that breakout here so far. But the only way we'd like to trade this here would be with that aggressive entry technique. So we need to see a high vol breakout, basically above high a day, right, which is 733.75. But I don't think we're going to be able to justify the risk-reward ratio on this time frame. Yeah, and it just looks like, I mean, if we look at the shorter time frame, it just looks like consolidation here. Same way that it looks like consolidation at this 19.8. So we need to see separation away from that range in some context, which would be a breakout to new highs. But now, right, we're not going to get that risk-reward ratio, because if we have our stop loss here at, say, 5.726.25, we can't have a retest of high of day as our entry price, right? It would have to be a deeper pullback, at which point if we see a breakout above and then that breakout not holding, that wouldn't be a fantastic sign of strength for a bull case. Yeah, Joey, unfortunately a little bit choppy. And maybe a little bit expected, right? Going into FOMC tomorrow still. So looks good on the daily time frame, but if we look at it from like a tradable perspective, there's not been a ton of range here so far today. So, okay, small green day, not the end of the world. We'll still got a little bit of time here to see if something wants to set up. But it's looking less and less optimistic, and the range has completely shrunk, right, in the last 30 minutes or so. Right, we got that 10 a.m. breakout, and then it's just not moved. So it's telling us a couple things. Either the market's waiting for something, right, or maybe there's like more volume still left to finish off into going from September to December. Or it could be both, right? Okay, and then we're back looking for that potential breakdown scenario on NQ, right? Again, need to see increasing outlier volume. So high vol breakout, right? So it looks unlikely on the 3. Maybe we have a chance here on the 5, but we need to close under this green box. So 50 seconds to go. Okay, so watching closely here. got to close another 10 points approximately. How do you feel about the volume? Volume not good enough, right? Increasing but not outlier. So now we go back to the 3-min. See if it gives me an opportunity. Already breaking down, but the volume, right? A little bit more work to do here. Okay, so 20 seconds to go. We got to see that volume get above that white line. It's going to be challenging. I would be surprised if it does. Right, so again, now we reset this to the 5-min. Then we've got two opportunities here. Potentially on the 10-min time frame, we could get that breakdown opportunity, right? If we get increasing, it will be above outlier. Or, right, we get that signal here on the 5-min, where if we get increasing, it should be outlier as well. So we got a little bit of time here. Markets are setting back up for another potential opportunity, but we need to see both a strong candle shape and a strong volume standard. We want to see it to look like a most bearish, second most bearish, normal body bearish candle on increasing outlier volume. As is, candle shape is fine. Nice work, Arya. We got to make sure we're getting good confirmation here. So 2 minutes to go, a lot of work to go still. So looking very unlikely, right, that this thing is going to close with the signal that we want. Again, NQ finding resistance right at that 19.8 barrier. All my homies hate 19.8. On NQ, no, because if I'm going to play a reversal, I want to see a fake out under a low of day. On ES, I was thinking about that a little bit, but the reason I would say no is we keep getting stuffed, right? All we have above us here, right? Like if I'm going to draw a line or a box, right? All I have above me is rejections. So hard for me to say that we've done anything to really invalidate those rejections. I need to get a breakout above that area of separation, right? Kind of what we talked about there on the 10. If I'm going to trust a breakout here, it's a breakout above the previous morning high. So there's too much resistance before that where I've just got evidence of it dying. So for me to have a signal, it would have to be a breakout above basically the upper end of that gray box. Otherwise, I'm just scared that this is going to happen, right? Because that's all I've seen happen here so far today. And same thing on NQ. NQ, if I'm going to have a signal here to the upside, it's got to be above that like 830. Or the basically opening range high, right? So yeah, 830 across the board. No, we need to get above that gray box one, right? So we still need to see a breakout above that high of day. Because all we have, right? I mean, in theory, you could go like risk reward like this. But that juice isn't worth the squeeze, right? Same thing, that 5 min, you're still looking, right, for a breakout above that 733.75. And what's missing here on this candle, right, is an increasing outlier volume profile. So no active setup there. Nope, not yet. We just talked about how we didn't want to play this fake out here, right, on NQ to the upside, right, because it didn't make a high a day or a low a day first and then reverse, right? It's a reversal basically in the middle of the day's range. So if I'm going to trade a fake out to the downside, it's got to be a fake out above the opening range high. So if I go to this graphic, right, like, and I look at it, it's telling me it's got to be a fake out above the opening range. That has not happened yet. So no active setup triggers here as of yet. We'll see if one wants to come together. Does that make sense, Ben? Okay, so now we're looking, right, for a high vol breakout to hold above this gray box. Always go setup first, right? What's my setup? So do I have an active setup? Then look for volume confirmation. Don't look at volume candles and then work your way back to confirmation. It's always setup, confirmation, execution. Do things in that order because you won't confuse yourself when you do. Okay, so ES possibly giving us that breakout scenario. And Q as well, right? Possibly giving us that breakout scenario. Might prefer this on the 3-min more than anything else. Yeah. Just beat me to it, Igor. Because this should give me the tightest risk reward. So we already have that outlier volume, right? So we're waiting for a candle to close as this most bullish, second most bullish, or normal body bullish, right? And then we can look to map things out. So, okay, we've got two possible stop loss locations, right? Stop loss low of this candle, or potentially, right, the aggressive entry technique, which would be like 837. So I've got my order window up, right? I'm double checking. Does it say NQZ versus NQU, right? I want to trade the December contract, not the September. And we're targeting a move towards this red line. Right? We're either looking for something like this. Let's see how this candle closes. All of a sudden, right, with 30 seconds to go, this no longer looks like candle 1, 2, or 3. It looks more like least bullish. So we'd like to see this fill out. If it doesn't, then we pass on the burden of confirmation to a longer time frame, right? And we reset. So 8 seconds to go. Ideally want to close above that green line. 2 seconds. Don't think it's going to. So did not. So we wait for this thing now on the 5 or the 10. Makes sense, yeah? Everyone know what we're looking for? Beautiful. So what we don't want to see, right? So on ES, sorry, on NQ here on the 3-min, the top wick was about the same size as the body of the candle. I want to see the body of the candle being bigger than the top wick, right? So maybe that's even easiest, right, on the 10-min. Let's see. 40 seconds, plenty of time. So we can kind of draw a line in the sand here, where we know if we close above 19,840, then our body is going to be bigger than the wick. So on this 5-min, right, we'll look for a close above that 19,840. So it's like a little intra candle benchmark for us, right? Ooh, that's right on the cusp. What did that close at? Right at 40. So 2 possible stop loss locations, right? As is, we'd be looking for a pullback into that 19,812. Yeah, I'm going to be focusing here on NQ ARIA. It's not that ES can't work, but I have less space on ES. So stop loss 19,812. So as is, right, that's risking about $500 a contract. So this would be a 1 contract play again. And ideally, I'd like a retest of around the green line. Sorry, around the top of the top of the green box. There we go. So that's elevator down, right? No entry here yet. So see how we moved down point to point? We went from being 840 to 820, right, in like a microsecond. We want to see it now climb back up with that same level of enthusiasm and then pull back slowly, right? That pullback happened very, very quickly, right? As if it was like trying to trick us or lure us into rushing into that trade. So for now, right, sitting on hands, no entry. And maybe that just means we play, right, it on the 10. Still not dead yet. Still an inside bar on this candle, so we have not invalidated this trade thesis here. But at this point, making it a little bit harder to trust a pullback entry. So maybe the best case scenario is this closes like an inside bar around that 40 area again. And then we can use the aggressive entry technique, right, to really maximize our risk. Right? Maximize our protection of our risk, I should say. But we're targeting about 100-point moves. That's a lot of juice there for us if we can get some oomph. So let's see if this thing can behave. About 50 seconds to go here. Excuse me. Still an inside bar, but not a great looking one. So this might be setting us up for the 10. So stop loss 19,790. So again, one contract as is, risking about $540. So this would be a one contract play. Just waiting for that appropriate pullback into my entry zone. And the closer I buy to 19.8, right, the better. So we've so far this morning seen 19.8 act as basically resistance here to the downside. We'd like to see it now act as an area of support, right, for a bullish narrative. So let's see. Yeah, OG risk entry, that's for sure. We don't get too many of these anymore. So at like an 805, right, that could be two contracts. We want to see how this holds, right, and reacts to 19.8. If it flushes through, then we know that that's a fake out. We want to see it now bounce back with enthusiasm. Not sure if it's done so yet. Like get back up to that 19.810, right? And then a low pullback back into this 98.50. For now, not the reaction we wanted. Right? And this 10-min candle is kind of behaving the same way that that 5-min did, right? As it creeped up towards its close, right? That 5-min candle was looking really, really good there for a brief moment in time. And then closed near the lows, right, of that range. So far, all we've done here is just avoided mistakes. And we did that, right, by defining how we wanted price action to behave at our entry. So far, has not given us that exact definition. So it's easy to sit and wait. Okay, so now it makes lower lows. So I know, okay, fake out scenario didn't give me that breakout trade that I wanted. Same thing on ES. So I'm saving myself money here. Now the trade that we're getting here is a possible high a day fake out, right? Aggressively. And that's on the 15-min time frame. So we're not dead yet. But it's making us work for our money here today, guys. So don't be rushing into trades. This is a choppy, nondescript day of trending price action. Please do not get tunnel vision and obsess over having to have some monster day. Market's not giving you mega follow through to the upside or mega follow through here to the downside. So be patient. Yeah, a little bit. Now, with this 15-min signal, because it's a higher day fake out, I don't need to close here under this range, right? So I could potentially look for something like this, but I would need to see it make lower lows and then retest before I can look to jump in short. So now we need to see it make lower lows right under 746, and then give me that like tick by tick pullback basically into that green box again. Yeah, so that's just the DTR ORB indicator. All this is, these red lines are just double whatever the size of the opening range is. So if this box is, we'll say 72 points, right? Then this red line is 2x 72 from the high and 2x 72 from the low. You can access the indicator in two ways. If you purchased it independently, then you would have been gotten an email with instructions on how to do that. If you have full Discord perms, then it'll be inside the FAQ section on how to add that to your chart. It's the opening range of whatever time frame you're on, John. So if it's on the 15, it looks like the high and low of the first 15 minutes. If you're on the 3, it looks at the high and low of the first 3 minutes. So each time frame gives you a different opening range. Send me an email, John. Michael@dtrtrading.com. Okay, so you're looking here at the 3-min time or 5-min time frame, sorry. A little inside bar setup, so this maybe gives me an opportunity for that aggressive entry technique. I just cannot get the risk reward on the 10 or the 15. justify taking that trade essentially. Again, I'm starting to not be able to have the opportunity there. The only alternative would be ES on the 15. But a 10-point stop loss with one contract on ES is $500. It's not super appealing. It's too big of a stop. John, if you're a full member access, just go into the FAQ section, right? It'll tell you how to add that indicator to your own chart. So literally just go here. Step 1, use my charts. It'll walk you through how to do that. So the feeling I'm starting to get here is that it's just going to be a chop day for the remainder of the session. Just contextually, right, we're getting a lot of fake outs higher, a lot of fake outs lower without really getting any immediate or consistent follow through post those candles. And then when we think about things from an economic calendar perspective, we also have FOMC tomorrow, right? So that's kind of like a main event thing where markets might just be a little bit stuck for that. I'm going to give it a few more minutes to see if we get resolution here on this signal. But it's feeling less and less likely as if we're going to get that opportunity. So I'm pretty happy to just take my $118 and yeah, walk away, right, and try again tomorrow. But it's not really feeling like we're going to get any oomph here. So I'm just a little bit skeptical. Yeah, it's not bad, Herschel. That's not bad at all. Yeah, Ashley, for sure. So just bring everything up here. Apologies. One sec. So essentially we played NQ here on a 10-min reversal. So it looked like this, right, as our opportunity, which was a version of this low vol fake out slash bearish failure thesis from the ORB logic. So that's our thesis, right? Strong candle shape, increasing outlier volume, pretty good looking opportunity. And we were targeting a move towards high of day. What ended up, to that red line here beyond high of day. That winning trade, the main issue with it post our entry is that on our next candle, right? So the one that we got an entry on, so this one here, we couldn't hold above that 1800 area, right? So that 19.8 area. So we closed just under that barrier, closed at 797. And we established that we wanted to see a breakout above that 19.8 if we were going to be able to hold for more continuation. So ended up closing that trade early because we weren't able to get basically that candle to hold above 19.8. So it's a reversal thesis that we had there in that initial morning. And then we wanted to see that previous area of psychological resistance turn into support. Once we couldn't hold above that on the 10-minute time frame, we were no longer confident that that support was actually going to hold. So I'll look to just cut that trade early for a small win. All right, so journal entry here, 2-trade day, played NQ short on a high volume breakout thesis within about 8 minutes of market data at 10 a.m. Felt like I had plenty of time and the thesis was close to the trade right before 10. The thesis was to close the trade right before 10 a.m., sorry. Signal was strong, thought I saw my elevator downstairs up, but just couldn't get the follow through I wanted and got stopped out about 3 minutes before market data dropped. Data ended up being a non-event and we didn't see a huge amount of algo activity, But after that failed move lower, it started to look like a reversal setup on NQ, 10-min time frame. So I looked to play that reversal idea. Got in at 19,772 with the stop loss a few points away using the aggressive entry technique. That next 10-min candle couldn't hold above 19.8. So I cut the trade early at 19,798.50 for a small net win on the day. So just a choppy session here going into FOMC. I'll just add that in here. So no real complaints here, team. Brings me up to 97 wins, 56 losses on the year. No real complaints. Not every day is going to be a monster, unfortunately, but that's the way she goes. Any questions here? Happy to break down anything here in the next couple minutes. Oh, I should also mention tomorrow, right, Wednesday. So you got another group coaching call here after our stream ends. We'll do it same like we did last week, right? Just inside, yeah, basically inside this live stream. Sure. If you're a DTR guest, please speak with your DTR advisor. They'll be able to get you all the information you need as well. But yeah, you're looking forward to trading with us here. Hopefully tomorrow's a slightly more volatile session, and then Thursday and Friday should really be the big money making days here of the week. But yeah, green is green. Won't really complain about that. But yeah, any other questions here, team? Any other questions? All right, final call here, guys. Final call, team. Final call for questions. Sounds good, Jared. Well, have yourself a great day, man. We'll talk soon. And same deal like always, guys. If you have any questions, hit me up outside of market hours. I'll do my best to get back to you as soon as I can. Otherwise, have yourselves a fantastic rest of the day, and I'll see you all inside the stream tomorrow. Peace.